everyone, welcome to EduTap. Good evening. Guys, if you can see me, if you can see the PPT, as well as if you can hear me without any audio issues, please type yes in the chat box. Hello Gaurav. Working fine? Okay. Okay. Hello Karthik. Hello Ramya. Kindly mark your attendance, guys, in the chat box. Let me know who all are there. So, have you studied for the previous lectures? Have you gone through the income tax, GST, and yesterday there were Depositories Act and Indian Contract Act? Have you gone through that topics? Also, let me know in the chat box that who all are the commerce students and who all know how to make journal entries. For today's lecture, two topics we are going to cover. One is the partnership accounts and one is the joint venture. So for joint venture, we need to know the journal entries. So mark your attendance and tell me that who all know how to pass journal entries. Gaurav is saying keep the session short, circle heavy ho gaya tha. Session will be for 2 hours because we have to cover a lot of topics. Okay. If I will go through quickly, then you won't be able to understand the topics. Okay. I'm starting with the partnership accounts, guys. So you know the meaning of partnership: two people, more than two people coming together, okay, doing the business together. Okay. If one person is doing the business, that is known as proprietorship. But when more than one, two or more than two people are going to do the business together, that is known as partnership. Now what is the difference between partnership and company? And guys, I want your responses also. Okay, keep commenting in the chat box what I'm going to ask. Okay, tell me the difference between partnership and company, and why are we forming the partnership and not a company? Okay, let me know in the chat box. So partnership is a relationship between persons who have agreed to share profits and losses of business carried on by all or any of them acting for all. So partnership is basically two people, minimum two people, okay, coming together, doing the business together, and then they will be sharing the profits or the losses of the business together. Now, is it necessary that all the partners who have come together for the business, all the partners will be working, or even one of them can be working and rest can be sleeping partner? Let me know in the chat box. Then the Indian Partnership Act 1932, it is a governing act for the partnership. So it is an act that governs the partnership firm. In case partnership deed is silent on any issues, provisions of the act will apply. Okay, what do you mean by partnership deed? Partnership deed means the agreement between the partners. Okay, so if there is no partnership deed, later I will be telling you that partnership deed is not mandatory, it is voluntary. Okay, so if there is no partnership deed, there is no agreement between the partners, then in the absence of partnership deed, the provision of Indian Partnership Act will apply. Then capital, what do you mean by capital? Capital is the amount of credit of partners capital account, the amount of contribution, okay, that the partners make, that is known as capital. It may be contributed by the partners in the firm or credited by way of his or her share of profit, salary, commission and interest on capital. Capital of the partner may be fluctuating or fixed. So there are two types of capitals of a partner: fixed capital or fluctuating capital. Okay, and in the capital account, what amount all will be credited? First of all, the amount that he has contributed to the business. Then secondly, his salary. The partnership firm will be paying some salary to him, that will be credited to him to the partnership account. Okay, then commission paid or interest on capital paid to the partner, that everything will be credited to the partner's capital account. Secondly, what will be debited to partner's capital account? Interest on drawings. Interest on drawings will be debited to partner's capital account. Now let me know in the chat box, will the partner's loan will be debited or credited in the partner's capital account? The loan given by the partner to the firm, okay, will it be debited or credited in the partner's capital account? I can assure you that if you give me 2 hours, okay, and if any question will be asked from these two topics in the examination, you will be able to solve. Okay, This is the most crisp section, and from these two topics, I am trying to cover everything possible, okay, for the examination. So you just have to spend 2 hours, and I think you can afford it. Nitin is saying it will be debited, okay. So let me tell you, the question was a trick question. See, okay, in partner's capital account, the loan given by partner or interest on the loan will not come. Okay, there will be a separate account known as partner's loan account. In that account, the partner's loan will be there, and interest on partner's loan will be to a separate account known as interest on partner's loan account. Okay, partner's loan or interest on partner loan will never come in the partner's capital account. Clear? Then features of partnership. What are the features of partnership? 2 or more person. So minimum number of person in a partnership firm is 2, and maximum number of partners in the partnership firm can be 50. Okay, minimum number is 2, maximum number is 50. Then agreement. The partnership is an agreement between 2 or more persons who decide to do business and share its profit or losses. To have a legal relationship between the partners, the partnership agreement becomes the basis. The agreement can be in written form or oral form. An oral agreement is equally valid, but preferably the partner should have a written agreement in order to avoid disputes in future. So the most important thing is it necessary to have an agreement? It is not necessary. But for a legal relationship, for creation of a legal thing, okay, we need to have a written agreement. Okay, if we are having an oral agreement, that is also fine, that is equally valid, but we should have a written agreement so that no disputes arises. Then third, legal business. The business to be carried out by the partnership firm should be legal. If the partnership firm is there, it should carry out a legal business. Okay, you shall not open a partnership firm for kidnapping others, for doing smuggling, for doing drug businesses. Clear? Next is sharing of profit. The agreement between partners must be to share profits and losses of an activity. Sharing of profit and losses is important. The partnership is not for the purpose of some charitable activity. Very important. You cannot form a partnership for a charitable work. Okay, you cannot open a partnership firm for a charitable work. Okay, for that you need to form a society or a trust. Next is liability of partnership. Each partner is liable jointly with all the other partners, and also when he is a partner, he is severally liable to the third party for all the acts done by the firm. Liability of the partner is not limited. This implies that for paying off the firm's debt, his private asset can also be used. So the liability in case of company, your liability is fixed to the amount of your share capital, but in case of partnership, liability is not fixed. Even your personal assets can be sold for paying of the debts of the partnership firm. Okay, and each partner is liable to the outsiders, and each partner is liable to other partners also. Okay, if suppose there are 5 partners, okay, and one partner out of them, one partner has done a business with the outsider, and due to that there is a debt on the part of the partnership firm. So will that particular partner will be paying him, or all the partners will be paying him? I am asking a question that if there are 5 partners in a firm, one partner has entered into a contract with a third party, and due to the third party due to the contract with the third party, there is a claim on the partnership firm. The partnership firm has to pay something to the third party. Now, will the particular person, the particular partner will be paying it, or the entire 5 or all the partners will be paying that particular amount? Shubham is asking that what are LLP then, sir? LLP is a limited liability partnership. LLP is a concept between partnership and company. So some of the features of company and some of the features of partnership are included in LLP. Clear? Very good, Gaurav. All the partners shall be liable in that case. Next is mutual agency. The business of a partnership firm may be carried on by all the partners or any of them acting for all. Each partner carrying on the business is a principal as well as the agent. He can bind other partner by his acts. So either one partner can be doing the business on behalf of others, okay, or all the partners can be doing the business. And each partner is a principal as well as an agent. So each partner is principal and others are his agents, and that partner is the agent of other principals also, other partners also. Okay. Even a single partner can bind the other partners by his own acts. Clear? Very good. All partners are liable. Next is partnership deed. I've told you partnership deed is the agreement between the partners. The Partnership Act does not require the agreement must be in writing, but when the agreement is in written form, it is called partnership deed. Partnership deed should be duly signed by the partners. It should be stamped and registered. Clear? It should be registered by the registrar of partnership. Clear? So the Partnership Act, it says that there should not be a written agreement. Okay, if there is a written agreement, it is not clearly mentioned in the Partnership Act. There is no such requirement. But for your personal purposes, to avoid any clashes, to avoid any disputes, you can have a written agreement that is known as a partnership deed. Next, terminologies. Some important concept I am going to tell you. First is the profit sharing ratio. It is a ratio in which profit will be shared by the partners. And capital ratio. Capital ratio is a ratio in which capital has been contributed by the partners. So these two ratios are different. Okay, profit sharing ratio is the profit shared by the partners, and capital ratio is the ratio in which capital has been contributed by the partners. Distribution of profits among partners. As we know, a partnership is where two or more persons work together and distribute among themselves all profit and losses. But how exactly will this distribution of profit take place? Let us see the accounting entries and effects of the distribution of profit. Okay, so as we know that two or more persons are coming together, they are doing the business together. Okay, and when the partnership form, it will generate some profits, so that profits will be distributed by the partners. Okay, but how this transaction will take place, how the entry will be recorded, let us see now. So profit sharing among partners. So first of all, if there is a partnership deed, they shall be sharing the profits as per the agreement given in the partnership deed. Okay, if they are saying that the profit will be shared 60-40, 60-40 will be done, 70-30, 70-30 will be done. But if no partnership deed is there, or there is a partnership deed, but partnership deed does not mention about the profit sharing ratio. Okay, if there is no partnership deed, or partnership deed is silent about this particular issue, then the sharing of profit and losses will be equally among partners irrespective of the capital. See, if one partner has contributed all the capital, another partner has contributed zero amount, okay, then also if there is no partnership deed, the profit and losses will be shared equally among the partners irrespective of their capital. Clear? Is anyone having any doubt till now? Anyone having any doubt till now? Some of the students have written in the yesterday's video that there is a lot to cover and you are having only 4 to 5 days for the examination. Guys, this is an extra session. Okay, we are just making this session so that the minimal risk, the minimal probability that we are trying to cover. Your main focus should be on the syllabus that was given in the notification. This is general topics. In phase 1 examination also it was seen that some of the questions were asked from Indian Contract Act, from the basics of law, from the basics of income tax, GST. So you should know these topics. Okay, if the question will be asked, okay, so you should be able to attempt it. Okay, we are doing it for your benefits. If you find these lectures difficult, if you're finding that you have to do so much for the examination, you cannot afford to see this lecture, then don't see it. Okay, these are some extra sessions. We're just trying to cover the probability of if even one question will be asked from these chapters. So I want, and EduTap wants, that you do not you do not lose on that 1 mark. Okay, the competition is really going to be tough. Many aspirants are preparing for it. Okay, guys. Sunil is saying mutual agency concept. Mutual agency means that, see, I am a partner, others, we are having 5 partners. If I have done an act, so others will be responsible. Okay, so they are acting as my agent. Okay, any partner can do an act and others will be binded by it. So that is a relationship between principal and agent. Okay, if an agent do an act, so the principal will be automatically bound by it. So that is known as a mutual agency concept. Next is provisions of Partnership Act relevant for accounting. Very important, profit sharing ratio. I've told you, if the partnership deed is silent about the profit sharing ratio, the profit and losses of the firm are to be shared equally among the partners irrespective of their capital contribution. Next is interest on capital. No partner is entitled to claim any interest on the amount of capital contributed by him in the firm as a matter of right. However, interest can be allowed when it is expressively agreed to by the partners. Thus, no interest on capital is payable if the partnership deed is silent on the issue. See, interest on capital. So, if there is written in the partnership deed that you have to pay interest on capital, you will be paying it. If partnership deed is silent about it, no interest on capital will be paid. Interest on drawings. No interest is to be charged on the drawings made by the partner if there is no mention in the partnership deed. So if there is a mention in the partnership agreement in the partnership deed, then you have to pay interest on drawings. If partnership deed is silent on the issue, you do not need to pay any interest on drawings. Next is interest on loan. If any partner has advanced loan to the firm for the purpose of business, he shall be entitled to get an interest of the loan amount at the rate of 6% per annum. Okay, if a partner has given loan to the firm, for the business, So he should be getting an interest of rupees 6% per annum. Okay, 6% per annum. If the partnership deed prescribes a higher rate of interest, so that interest will be paid. If partnership deed is silent on that issue, so by interest on loan will be paid at 6% per annum. Next is remuneration for firm's work. No partner is entitled to get salary or other remuneration for taking part in the conduct of the business unless there is a provision for the same in partnership deed. So if the partnership deed is silent, okay, so no remuneration, no commission, no salary will be given to any partner. But if the partnership deed is having something mentioned in the partnership deed, then you shall be paying commission or remuneration to the partners at that particular rate. Clear? Any doubt till here? Is anyone having any doubt till here? And I want each and everyone to like the video. Hit the like button, guys. The next topic is goodwill. Before starting with the goodwill, I would like to know that the topics, the basics of partnership is clear to everyone or not. And questions are normally asked from the basic topics only. Questions are never asked from difficult topics. Okay, because they know that students from different backgrounds are giving the examination. Difference in point B and D. One is capital and one is loan. Okay, loan is difficult, capital is difficult or different. Okay, loan and capital are different topics. अगर एक MCQs होंगे, जरूर होंगे MCQs. पहले टॉपिक पढ़ेंगे फिर MCQs करेंगे हम. Clear? Loan is different and capital is different. It will be clearly mentioned in the MCQ paper that it is capital or loan. Okay. Next topic is goodwill. What do you mean by goodwill? Goodwill is a brand reputation, okay, that the firm earns over a period of time. Goodwill of a business may be termed as the credibility of the business in the market earned over a period of time. So if you're spending a lot of time in the market, you earn a credibility, you earn a brand reputation. Okay, so that brand reputation or that credibility is known as goodwill. Goodwill is qualitative in nature. It is a reputation of the business which increases with the passage of time. Now what happens is, goodwill is normally an intangible asset. You cannot touch it. And it is a qualitative term. If I ask you to assess the goodwill of your company, that will be different according to you, that will be different according to me, and according to a third party, it will be different. So you cannot ascertain it with a definite amount. It is included under the head of intangible assets. In balance sheet, it is included under the head of fixed assets, intangible assets. Okay. Goodwill is measured as per Accounting Standard 26. So Accounting Standard 26 tells you about the goodwill. Clear? Now, we need to ascertain the value of goodwill for some purposes, and to ascertain the value of goodwill there are some methods. Although goodwill is qualitative in nature, but we need to ascertain the value because the goodwill is earned by the previous owner. If the ownership changes, or if the profit sharing ratio changes, or any new partner is admitted to the firm, then we need to assess the goodwill. And to assess that goodwill, there are a lot of methods. We shall be studying about that particular methods. Let me see the doubt. Biplav is asking what happens if any one of the partner dies. Is the partnership dissolved? Biplav, we shall be seeing about the death of the partner cases, admission of a new partner, retirement of the partner. All cases will be discussed today. And for your answer, when a particular partner dies, the partnership firm is not dissolved. Factors on which goodwill depends. So goodwill will depend on the following factors: location of the business, nature of products and their reputation, personal reputation of the partners, after sales service and sale promotion including advertisement, maintaining the quality of products, possession of efficient employees. If you are having efficient employees, okay, you must have seen that Facebook, Google, they are having a lot of efficient employees, so that increases the goodwill. Maintaining the quality of products, okay, the products, if they are certified, if they are of a very good quality. For example, when I talk about a particular thing, okay, when I talk about toothpaste, so the first brand that comes to your mind is Patanjali, or it can Colgate or Pepsodent. Okay, so because they are serving over a long period of time and they are maintaining their quality over the years, so that is why their goodwill is high. Next is after sale service and sale promotion including advertisement. So what happens is, some of the car companies, they are providing a very good after sale services, so you want to purchase them, okay, or some of the cars are there which are low maintenance, so you want to purchase those cars, so it means that they are at a high goodwill. Then is personal reputation of the partners. If the personal goodwill of the partner is good, okay, for example, Infosys, Infosys is a company. I'm just giving you an example. Infosys is a company, and its goodwill is high. Okay, one of the main reason is due to the goodwill of Narayan Murthy. So if the personal reputation of the owner is good, then also the goodwill of the company or the firm increases. Nature of products and their reputation. The products should be high standard products. That will also increase your goodwill. And location of business. Where the location of business, where the business is located, that will also increase the goodwill. If the you might have thought that imported products are of high quality, okay, or the products that are being manufactured in a cyber hub. Okay, just take an example. If I'm talking about a IT company, if the IT company is located in cyber hub Bangalore, okay, that is known as the Silicon Valley, so automatically the goodwill increases. Clear? If you guys are having any doubt in any of the slides, ask me now only. Next is need for the valuation of goodwill. So these are the four scenarios in which we need to ascertain the value of goodwill. First is when the profit sharing ratio of the partners changes. Okay, before that particular event, partnership was carried out with a different profit sharing ratio. After that, they want to change the profit sharing ratio. So at that time, we need to calculate the value of goodwill. Next is in case a new partner is admitted. You are admitting a new partner to your firm. So at that time also you need to ascertain the value of goodwill. In case of death or retirement of a partner dies or a partner retires. So in that case also goodwill is valued. And last is when the entire business is sold. You are selling your business to a third party. So in that case also you need to evaluate your goodwill. Okay, I will tell you the reason for that. So on this particular date, the business started, and on this date, the event happened. Which event? The four events. Any of the four events. Okay. On this date, profit sharing ratio changes, or on this date, a new partner is admitted, or on this date, an old partner dies, or he retires. Okay. Then the goodwill that was earned between this period, that belongs to the old partners. Okay, in their old profit sharing ratio. The goodwill that was earned by the partners belongs to the old partners and their old ratios. So that goodwill, okay, that is an asset of the old partners, that should be given to the old partners only. The new partners do not have any right in that. Am I clear? Okay. And whenever the entire business is sold, for example, I have run a business, okay, for a period of time. So that is, I've run the business for 10 years. I've run the school for 10 years approximately, okay. And I'm having assets worth rupees 2 crores. Now assets means fixed assets, land, building, equipment, furniture, etc. Okay, now I want to sell my business to a particular person. He wants to buy my business. So what will be the value of my business? Will it be only the value of the fixed assets? Not at all. Okay, I have opened a school. The very first day there were 2 students, 5 students, and by spending 10 years, by maintaining the quality of education in my school, today there are 1000 students in my school. Now if I'm selling my business to a third party, if I only sell the furniture, the land, building, the fixed assets, it will take him 10 years to be at par with my position. Clear? It will take him 10 years to be at the par of 1000 students. Okay, so if he is buying my brand name also, if he is buying my goodwill also, so that means he will be getting 1000 students from the very first day. So that is why he should pay me for the goodwill also. He will not only pay me for the fixed assets, he will be paying me for the goodwill of my company or goodwill of my firm also. So I need to ascertain the value of goodwill when the business is sold to a third party. Clear? Next, method of valuation of goodwill. How goodwill is ascertained? 3 methods we shall be seeing. One is the average profit method, second is the super profit method, and third is the capitalization method. Okay. So in examination, what I hope is they should not ask you practical questions on calculation of goodwill. I have given you questions how to calculate goodwill. I have given you illustrations also. But in exam, what they can ask you the name of the method, they can ask you the formula, but they won't ask you the calculation. First is the average profit method. Under average profit method, profit of some years, say 5 years, are averaged out and adjusted for any change that is expected to incur in near future. The average profit is then multiplied by an assumed purchase period to calculate the goodwill. Clear? So there are 2 terms here. One, as the name suggests, average profit method. So we are taking average of the profits. Okay, for how many years it will be given in the question. Okay, for previous year profits we are taking an average. So I am giving you an example. If profits of a firm for past 4 years are rupees 9,000, 10,000, 12,000, 15,000, and the goodwill is to be calculated at 2-year purchase, then calculate the goodwill. What do you mean by 2-year purchase? They have told you that the average profit is multiplied by an assumed purchase period. So the purchase period is a multiplier here. What do you mean by purchase period? Guys, if I've sold my business to a particular person, so for the initial some year he will be getting the benefit. Okay, for example, I've told you that I've sold my school to a particular person. Now he will be getting the benefit of my goodwill for the next 3 to 4 years. After that, if he does not maintain the quality, the number of students will start declining. So he is going to reap the benefits of the goodwill for a particular period of time. Okay, that is known as purchase period. That is known as purchase period or year of purchase. So that is a basically multiplier. It is an estimated figure. It is not an exact figure. It is an estimated figure. So the question is given that they have given you past 4-year profit, and they have also told you how to calculate. They have told you the number of years of purchase. Then they are asking you to calculate the goodwill. First of all, we shall be taking the average of the last 4 years of profits. So 9,000 plus 10,000 plus 12,000 plus 15,000 divided by 4 is equals to 11,500. This is your average of the last 4 years profit. Okay, then you shall be multiplying it with the multiplier year of purchase. Then that is multiplied with year of purchase. 11,500 into 2-year purchase is there, so the goodwill will be 23,000 rupees. Goodwill will be 23,000. So this is the average profit method. Am I clear to you? This is the average profit method. Any doubt in average profit method? Once we complete all the methods, once we complete all the discussion, then I will be asking you questions also from in today's video, MCQ questions. Clear? Any doubt till here? We shall be moving slowly so that you are able to understand the topics. Are you having any doubt? If it's clear, then give a thumbs up. Next is super profit method. Super profit method is one step ahead of the average profit method. In this method, the normal profits for the year under consideration are taken after deduction of interest and capital and salary of partners. Net profits so derived are then compared to the average profit, and the excess of normal profit are the super profit. The super profits are multiplied by number of years of purchase to calculate the goodwill. Okay, so what we are doing is we are comparing the average profit, okay, with an amount. Okay, that is a normal profit. So average profit, what is above the normal profit, that is your super profit. Clear? I'll give you an example. If profits of the firm for the past 4 years are rupees 9,000, 10,000, 12,000, 15,000, and the goodwill will be calculated at 2-year purchase, then calculate the goodwill as per super profit method. So what they have given you, they're telling you that the last 4-year profit is this. Okay, and goodwill is calculated at 2-year purchase. You have to calculate the goodwill, but not at average profit method. You have to calculate it as per super profit method. Now they have told you the normal profit for the last year. Okay, we are assuming that the last year profit is 9,000, and our average profit is, first of all, we shall be taking the average profits, that is divided by 4, 11,500. Okay, then the last year profit, they will be giving you whether it is 9,000 or 11 or 15,000. Okay, they will be giving you a profit. We are assuming that the last year, the most last year, okay, the recent year profit is 15,000. Clear? This is the normal profit for the current year. Now super profit is the difference between the just last year profit and the average profits. Okay, so super profits are the difference between 1 and 2, that will be 3,500. Here we are assuming that the profits are always increasing. The goodwill is earned because the profits are always in an increasing trend. Okay, so profit for the past 4 years are 9,000, then it increased to 10,000, then it increased to 12,000, and at last it is 15,000. Okay, so the profits are always increasing. So at this position of time, our last year profit is 15,000 and average profit is 11,500. So our super profits are different between them two, and goodwill is equal to super profit into number of year of purchase, that is 3,500 into 2, that is 7,000 rupees. Am I clear? Is anyone having any doubt in super profit method? Any doubt in average profit and super profit method? Niharika is saying, good evening sir, when will EduTap conduct a session directly related to the syllabus? We have conducted a lot of sessions, Niharika. On YouTube you can search, a lot of sessions have been done for the syllabus only. Approximately 42 sessions we have conducted. Next is capitalization method. So under capitalization method, goodwill of the firm may be calculated by comparing the net assets and value of the business. So under capitalization method also there are two sub methods. One is the capitalization of average profit, and other is the capitalization of super profit. The value of the business is calculated by dividing the normal profits by reasonable rate of return. The net assets or the capital employed is then deducted from value of business to determine the goodwill. Anupama and Preet Kaur, you are saying that no doubt or you do not have understood it. So is it clear to you or you are having in doubt, Anupama and Preet Kaur? So capitalization is divided into two types: capitalization of average profit and second is capitalization of super profits. Okay, capitalization of super profits is very easy. Okay, capitalization of average profit will require one or two steps. So first of all, capitalization of average profits. Goodwill is equals to capitalized average profits minus actual capital employed. Capitalized average profit minus actual capital employed. Clear? Okay. So capitalized average profit. The formula for capitalized average profit is average profits into 100 divided by normal rate of return. Normal rate of return will be given in the examination. Normal rate of return means normally on the value invested in the business. For example, I have invested 2 lakhs in the business and I am earning 30% profits. So that means 30% of 2 lakhs, that is 60,000. Okay. So my normal rate of return is 30%. Okay. I have invested 2 lakh in my business. I have received 60,000. That means my normal rate of return is 30%. And second is actual capital employed. Actual capital employed means total assets excluding goodwill, because we are calculating goodwill, so we cannot take the value of goodwill here. Total assets minus outside liabilities. Okay, outside liabilities means the money we owe to the outsiders. Reserve and surplus, share capital will not be included here. Okay, I'll give you an example also for this. Capitalization of average profits. This is a very detailed example. Trust me, it will not be asked in the examination. What is important for examination are these two formulas. If they will ask you something, they will ask you these two formulas only. They will not ask you in SEBI examination about the detailed methods. Clear? Clear? Any doubt till here? I'm not going to make you do this because this is for some another detailed topic and this is not for your examination. Clear? They will not ask you such detailed questions. If I have mentioned it in the PDF that will be available to you in the course as well as Telegram, so that if any students wants to go through it, you can for your own satisfaction, but for examination it won't be asked. Next is capitalization of super profits. Very easy. The goodwill under this method is ascertained by capitalizing the super profit on the basis of normal rate of return. So you have calculated the value of super profits. Okay, average super profits you have calculated. Okay, I have told you how to calculate the super profits. Now you have to multiply it by 100 and divide it by normal rate of return. I'll again give you an example. First, calculate super profits as you have done in the super profit method. You have calculated the super profits. Okay, for example, super profits that was calculated was 3,500 rupees. And normal rate of return, it will be given 20%. Now you have to divide 3,500 by 20%. That will be 17,500 rupees. Clear? 17,500 rupees, the value of goodwill. So these were the three methods of goodwill calculation: average profit method, super profit method, and capitalization method. Now, apart from them also, there are some methods to value the goodwill like annuity method, etc. But we shall not be studying them as neither they are a part of a syllabus and in the most of the examination they are never asked. Okay, and annuity is a method related to finance. Okay, so normally they are not asked in the examination, but everything that could be asked I have covered it in the video. Next topic is admission of a partner. When you are admitting a new partner in the business. So suppose these are the old partners A and B. Okay, the old partners, they are sharing the profits in 75% and 25%. 75-25 is the ratio of sharing the profits. This is a new partner C. Okay. Now, before admission of a new partner, the A and B, they share the profits in the old profit sharing ratio 75-25%. Clear? For admitting a new partner, they will sacrifice some of their profits in his favor. Now 75 plus 25 is equals to 100%. So there is no space for a new partner. But if they want to admit C as a partner, they have to sacrifice some of their profits in favor of C. Okay, they have to change their ratios. Absolutely correct. They have to sacrifice some of their share in favor of C. They have to change their profit sharing ratio. So for example, C shares after admission will be 40%. They are saying that after admission, C will be entitled to 40% of the share of profits. So suppose A gives 35% and B gives 5% to C. Out of their share, A is saying that I will be giving my 35% to C, and B is saying I will be giving 5% to C. Okay, so 35 plus 40 is equals to 40%, and now C will be entitled to 40% of profits. The new profit sharing ratio will be 40, 20, and 40. So new profit sharing is 40%, 20%, and 40%. Okay. So one more important term is the sacrificing ratio. So this is the old ratio you got. This is the new ratio. 75-25 is the old ratio. 40-20-40 is the new ratio. One important term is sacrificing ratio is the ratio in which old partners sacrifice their share of profit in favor of the new partner. Okay. Sacrificing ratio is the ratio in which old partners sacrificing their share of profit in favor of new partner. Sacrificing ratio is the old ratio minus the new ratio. Old profit sharing ratio minus the new profit sharing ratio. Clear? Okay. So in this particular question, the sacrificing ratio will be old is the 75%, new is the 40%. That will be 35. Okay. And B is 25 minus 20. So 25 minus 20, that is 5%. Okay. So it will be 35 is to 5. 35 is to 5. Okay. It will be 35 is to 5. That will be 7:1. The sacrificing ratio in this case will be 7:1. Okay. Since A has given 35% profit and B has given 5%, they have sacrificed 35 is to 5. That is 7:1. So the sacrificing ratio will be old ratio minus new ratio. Am I clear here? Do you want me to repeat? You should know the meaning of this term: capital ratio, profit sharing ratio, new profit sharing ratio, and sacrificing ratio. One more term will come in future slide, that is the gaining ratio. Now admission of a partner. I am giving you an example. So A and B are partners sharing profits in the ratio of 3:2. A new partner C is admitted for 1/6 share in the future's profit. The new profit sharing ratio among A, B, and C and sacrifice ratio of A and B shall be computed as under. Okay. So what they are doing is A and B are partners and their old ratio is 3:1. Now they are saying they will be adding C as a partner and C will be given 1/6 of the total profit of the future profits. Now you have to compute A, B, and C sacrifice ratio and new profit sharing ratio. So their old ratio is 3:1 and they have to give 1/6 to C. Now the remaining future share will be 1 minus 1/6, that is total is 100%. We are taking 100% as 1. Okay, so if I subtract the C's share, okay, 1 minus 1/6, that is 5/6. Clear? This needs to be shared among A and B in 3:2. 5/6 is remaining and they will be sharing it as 3:2 in 3:2 ratio. Okay, so A's new share will be 5/6 into 3/5. B's new share will be 5/6 into 2/5. That will be 2:6. Clear? And C's share we already know it is 1/6. Okay, so this 1/6 is the gain of C. Clear? 1/6 is the gain of C. Now the new profit sharing ratio is 3:2:1. So the sacrifice ratio among A and B is 3:2. 3:2. How to calculate it? I will tell you. A sacrifices. How much is the A sacrifice? Earlier he was getting 3/5. Now he is getting 3/6. Okay. So 3/5 minus 3/6 you can calculate. It will be 3 only. Okay. And B earlier it was getting 2/5. Now he is getting 2/6. So 2 by 5 minus 2 by 6 is equals to 2. So that means 3 is to 2 is the sacrifice of A and B. Clear? Anyone is having any doubt here? Any doubt in this particular chapter? Any doubt in the admission concept? Any doubt on goodwill till here? Ask me. Okay, some important adjustment related to admission of a partner. New partnership deed. Obviously, when you are adding a new partner, so the partnership date will change. Okay, the old agreement will be cancelled and a new agreement will be signed with new terms and conditions. Next is share of capital and goodwill. So as per the agreement between the new partner and old partners, new partner has to bring his share of capital and goodwill in the firm as per his share of profits of the firm. Okay, so now a new partner is admitted. So when we are adding a new partner, he will bring some capital. Okay, and he will also bring his value of goodwill. Okay, the total goodwill will be calculated. For example, the total goodwill is 50,000. New partner is admitted for 1/5 of the share, so he will bring 1/5 of the goodwill to the firm. Okay, that is 10,000 rupees goodwill, and that 10,000 rupees goodwill will be shared among the old partners. Clear? And in which ratio it will be shared among the old partners? In their sacrificing ratio. Okay, in their sacrificing ratio. Next is adjustment for reserve and accumulated profit and losses. So the reserve, the general reserve that were lying with the company, okay, and the accumulated profits, okay, that were lying in the with the company. Now they have been earned by the old partners. Okay, the old partners have a right on them. The new partner does not have a right on them. So they will make an adjustment for that also, and that will be adjusted in their old profit sharing ratio. Next is revaluation of assets and liabilities. When you are doing something addition, when an old partner dies or retires, then you should know the true financial position of the company. So you should also reevaluate your assets and liabilities at that time. And last is adjustment of the share of goodwill brought by the new partner. So the goodwill that will be brought by the new partner, his share of goodwill, that will be distributed by the new by the partners in their sacrificing ratio. Clear? Now what type of questions are asked from this particular side? That this will be done in which type of ratio? That is why I have told you meaning of sacrificing ratio, old capital ratio, new capital ratio, new profit sharing ratio, old profit sharing ratio, sacrificing ratio, and capital ratio. So you should know that if this adjustment is to be made, then in which ratio you will be doing it. Okay, the old partners, the new partner share of goodwill that he will be bringing will be distributed among the old partners in the sacrificing ratio. Clear? I'm starting with retirement or death of a partner. If you're having any doubt in admission of a partner or goodwill, ask me now. Any doubt in retirement or death of a partner? Okay, I hope no doubt is there. I'm starting with retirement or death of a partner. The retiring or deceased partner is entitled to his share of goodwill at the time of retirement or death because the goodwill earned by the firm is a result of the efforts of all the partners in the past. So when the firm or when any partner retires or dies, the firm is not dissolved. The firm is carried on by the old partners, okay, or the new the partner who is retiring or who has died. Okay, mainly in the case of death, his representative, he joins the firm. Since in future profits will arise because of the present goodwill, so the profits, okay, or the goodwill, okay, suppose on a particular date a partner dies or he retires, okay, so before his retirement or before his death, he has done some hard work. Due to him also the company has earned some goodwill, okay, and that goodwill, the benefit of that goodwill will be reaped by the other partners, okay, the surviving partners in the future years. So he should get the benefit of the goodwill, he should get the value of the goodwill, okay. So the retiring or the deceased partner will not be sharing future profits, he will not be sharing the future profits, but he should get the value of the goodwill. Therefore all continuing partners pay to the retiring partner the share of goodwill in gaining ratio. What is the gaining ratio? Suppose one partner has died or the partner has retired. Okay, so his share will be given to the other partner in the particular ratio. That is their gaining ratio. It is fair to compensate the retiring or deceased partner for the same. When a partner leaves the company, the profit ratio of the existing partner changes after they acquire the retiring partner's share and distribute among each other. The profit sharing ratio will change because now they have acquired the retiring partner's share, okay, or the died partner's share. And in the ratio in which they have acquired the share, that is known as gaining ratio. Gaining ratio is the opposite of sacrificing ratio. Sacrificing ratio was old ratio minus new ratio. Gaining ratio is new ratio minus old ratio. Okay, you should also remember the formulas. So that was all regarding partnership. I have tried to cover all the concepts. Now some important questions for you. Very first question: following are the essential elements of a partnership firm except dash. So first is it should have at least 2%. Second, there is an agreement between all partners. Third is equal share of profit and losses. Fourth is partnership agreement is for some business. If you have understood partnership, just hit the like button. If there is no doubt in partnership, by just seeing the video that I have given you, first of all, you all will be able to answer all my MCQ question. And if anything is asked in the examination also, then also you can attempt it easily. Okay, either by your knowledge or by the technique of elimination. Shubham Pal has given the answer. He's saying it should be C. Anupama, Anuradha, Preet, everyone is saying C. Absolutely correct. The answer is C. Question number 2. Which of the following statement is true? A minor cannot be admitted as a partner. A minor can be admitted as a partner only into the benefits of the partnership. Third, a minor can be admitted as a partner but his rights and liabilities are same of adult partner. D, none of the above. Now, many of the students will be thinking, sir, you have not taught about minor in partnership chapter. Array, it is a concept of partnership also and it is a concept of Indian Contract Act also. Yesterday's video I have taught this particular concept. Absolutely correct. Absolutely correct. A minor can be admitted as a partner but only as a partner in profit. Okay. Very good. But only 6 students have replied. 7 students. Okay. Others also reply. What should be the minimum number of persons to form a partnership? 2, 7, 10 or 20? I can see only 2-3 students are replying. 20-25 students are online. I want each and everyone to reply. Preet is saying B. Absolutely correct. 2 partners are required. Next, the current account of a partner will always have a credit balance, will always have a debit balance, may have a debit balance or credit balance, or can never have a debit balance. C, absolutely correct. Current account can have debit balance also and credit balance also. The capital account will always have a credit balance, but current account can have a debit balance also or credit balance also. Next is liability of a partner is limited, unlimited, determined by court or determined by Partnership Act. Absolutely correct. Liability of a partner is unlimited. But why only 2-3 students are applying? Guys, you should be quick. In the examination, they want to give you more than 20 seconds to reply for this type of question. Okay? Very easy question, yeah. Biplab, your answer is wrong. Liability of partner is always unlimited. Okay. In case of LLP, limited liability partnership, their liability is limited. But normally, when I'm talking about normal partnership, the liability is unlimited. Next question. Every partner is bound to attend diligently to his in the conduct of dash. Every partner is bound to attend diligently in the conduct of dash his rights, his meeting, his capital, his duties. Very basic level question. You can attempt this question by your common sense also. You can attempt this question with your common sense also. Should we think D? Also, do you require any specific knowledge of Partnership Act for this particular question? No. Very basic question, yeah. It cannot be right when you have to be diligent in the conduct. You do not conduct your rights. You do not conduct any meeting specifically. You do not conduct any capital. You conduct the duties. Okay. Shumit cannot be C. See the language in the conduct of capital or conduct of duties. The most appropriate would be conduct of duties. Next is forming a partnership deed is dash mandatory, mandatory in writing, not mandatory or none of the above. Forming a partnership deed is dash mandatory, mandatory in writing, not mandatory, none of the above. Only thing is non-mandatory. Shubham Pal is going with C. Hurry up guys, 25 students online, 25 likes should be there and 25 answers should be there. अच्छा, have you hit the like button? Those who haven't liked the video, जल्दी से बताओ मुझे कौन है वो? C. It is not mandatory. Very good, very good. Next question for you. Partnership deed is also called dash prospectus, article of association, principle of partnership, article of partnership. Very important, very good, very basic question. Not a basic question. इसकी तो knowledge चाहिए. But by technique of elimination, you can attempt it. By technique of elimination, you can attempt it. Going with C. Okay. Going with C. सब तुक्का मार रहे हैं. Everyone is guessing. Wow, Shubham Pal, absolutely correct. The answer is D. Article of partnership. Partnership deed is also known as article of partnership. I haven't taught you, but important question. Written partnership agreement, which has all the rules and regulation implied on all the partners mentioned thereof, is called partnership deed. It is also known as partnership agreement or constitution of partnership or articles of partnership. Another name of partnership agreement is partnership deed, partnership article of partnership or constitution of partnership. Clear? Just remember the other names. No concept here, just another names. Question number next. In the absence of a partnership deed, the interest is allowed on partner's capital at 5% per annum, 6% per annum, 12% per annum, or no interest is allowed. In the absence of partnership deed, at which rate of interest is the interest on capital allowed? 5% per annum, 6% per annum, 12% per annum, or no interest is allowed. Clear? ऐसे क्वेश्चन एग्जाम में पूछे जाते हैं, बच्चों वाले क्वेश्चन. अगर जिसने पढ़ा होगा ना, आप भूलोगे नहीं कभी भी इसको. Once you've gone through the video, you will never forget it. Acha, honestly tell you one thing. Some people were feeling a pressure of the examination that, sir, at the last moment we are doing new topics. The topics I made you do today about partnership, do you find anything to revise it again, or everything is covered in the video? Okay, do you find anything here to revise again? If in half an hour or 1 hour, approximately we have given 55 minutes to the topic, okay, and we are also doing the practice questions. So do you find anything to revise it again and again? Are you finding any pressure, or are these very basic questions, or are these, can it be attempted by you now? Any question related to partnership, can you attempt it now in the examination? B. Everyone is going with B. Manjunath is going with C. Manjunath, I hope you have not seen the lecture. Okay, in the lecture I have told you this is 6% per annum. Sorry, it is no interest is allowed. 6% is for the 6% is for the interest on loan. Okay, those who are answering B, you are absolutely wrong. I have told you no interest is allowed on partner's capital in absence of partnership deed. Interest on loan is allowed at the rate of 6% per annum. Everyone given the wrong answer. Everyone has given the wrong answer. Hey guys, what are you doing here? I have told you interest on capital and interest on loan are different. Okay, let me remind you. Give me a second. Let me remind you. Just see here. B point, interest on capital. Okay, in absence of any anything clearly mentioned in the partnership deed, no interest on capital will be paid. Okay, and for interest on loan, they are saying 6% interest on loan will be paid even if nothing is mentioned in partnership deed. Okay, if partnership deed mentions a high rate of interest on loan, that will be paid. Now the question was not in your attempting, the question was about reading the question wrong. Okay, the silly mistake was in reading the question. Interest on loan and interest on capital are two different things. Clear? 41 students have joined the live chat. Please hit the like button. If it is clear to you now, give me a thumbs up. Okay. Next is, in the absence of a partnership deed, the allowable rate of interest on partner's loan amount will be dash. 6% simple interest, 6% per annum simple interest, 12% simple interest, or 12% compound interest. Everyone going with B, simple interest 6%. Clear, very good. Biplab, A and B are both 6%. 6% simple interest per annum should be there. Okay, wrong option is ticked here. It should be B. Okay, should be B. Okay, in absence of partner's loan, in anything mentioned in the partnership deed, you shall be paying interest at the rate of 6% per annum. Okay, and one more important thing, it will be paid irrespective of profits or losses. Even if there are losses in the firm, partner's loan interest will be definitely paid. Next is, in the absence of partnership deed, the following rule will apply. First, no interest on capital. Second is profit sharing in capital ratio. Third is profit based salary to working partner. D is 9% interest on drawing. So in the absence of partnership deed, which rule will apply definitely? In absence of partnership deed, which rule will apply definitely? Let us check by elimination technique. So we know there will be no interest on drawing. Clear? So D cannot be the answer. C, profit based salary to working partner. No. If there is nothing mentioned in partnership deed, no salary will be paid to any partner. B, profit sharing in capital ratio. It is also wrong, since if nothing is mentioned in partnership deed, profit sharing will be done equally. Okay. So A should be the correct answer here. Next is, in the absence of agreement, partners are not entitled to dash. In the absence of any partnership agreement or partnership deed, partners shall not be entitled to salary, commission, equal share in profit, or both A and B. In the absence of any agreement, partners are not entitled to salary, commission, equal share in profit, or both A and B. Radha, Biplab, Anupama, going with D. Gaurav, Shubham going with D. Preet Kaur going with D. Nitin going with D. Okay. D is the correct answer. Next is, interest on capital will be paid to the partners if provided for in partnership deed, but only out of dash: profits, reserve, accumulated profit, or goodwill. Very basic question. Interest on partners' capital will be paid to the partners if provided in the partnership deed, but it will be provided only out of dash: profits of the company, reserves of the company, accumulated profit, or goodwill. By the language of question, you can easily guess the answer. Language of question has already given the answer to us. Interest on capital will be paid to the partners if provided for in the partnership deed, but only out of dash. Doing a silly mistake, guys. Doing a silly mistake again. Absolutely correct, Moonlit. The correct answer is A. Our first preference will be given to profits. They have mentioned clearly, but only out of. Only means only out of the first source, and the first source, it cannot be goodwill, it cannot be reserve. Okay. The first source to pay a particular thing is your current year profits. Okay. Because interest on capital will be paid in the current year only. It will be paid in the current year only, and it will be paid by the current year profit only. Okay, you cannot pay it from the previous year profits. Clear? A is the correct answer. In the question, you can see the language. Interest on capital will be paid to partners if it is provided for in the partnership deed, but only out of. So when only out of is written, you can easily guess it would be profit. Next, which one of the following items cannot be recorded in the profit and loss appropriation account? What do you mean by profit and loss appropriation account? So after the profit and loss is decided by the company, okay, in the profit and loss account, then a profit and loss appropriation account is made. And in profit and loss appropriation, what we do, we basically distribute the profits, okay, in some heads. For example, I'll tell you the heads, okay. So that is known as the profit and loss appropriation account. Options are given to you: interest on capital, interest on drawings, rent paid to partners, and partners' salary. Yes, it is C. Rent paid to partners. Profit and loss appropriation, we have salary given to partners, interest paid to the partners. Okay. Then we have your net profit and profit and loss, the amount that is left, that is transferred to the reserves. Okay. and then we have the profit, the part of the profit that are paid to the partners. So these three items are written in the profit and loss appropriation account. Also, the drawings that are being charged or interest on drawings that are given in the profit and loss appropriation account. Okay. So one type of question that can be asked is, this particular item is a charge against profit or appropriation of profit. For example, they have given you interest on capital. So interest on capital is a charge against profit or appropriation of profit. So it is an appropriation of profit, since it is an item of profit and loss appropriation. Rent paid to partners. Rent paid to partner is a charge against profit. Okay, it is a charge against profit. So it will not come in profit and loss appropriation account. It will come in profit and loss account. Clear? Next is, in the absence of partnership deed, partners share profit and losses dash in the ratio of their capitals, in the ratio decided by the court, equally, or in the ratio of time devoted. In the absence of partnership deed, in what ratio partners will share the profit and losses? Equally, in the ratio of their time devoted, in the ratio decided by the court, or in the ratio of their capitals. C, okay, C is the correct answer. Next is, interest on partners' capital will be debited to dash profit and loss account, profit and loss appropriation account, partners' capital account, or none of the above. This is a new topic, guys. I have not covered it in the video. Profit interest on partners capital account will be debited to dash. The correct answer is B, profit and loss appropriation account. Clear? All have given the correct answer. Next is, for the firm, interest on capital is dash. For the firm, interest on capital is dash. Capital payment, capital receipt, expense, or income. For the firm, capital payment is, interest on capital is dash. Capital payment, capital receipt, expense, or income. It is an expense. Next, when a partner is given guarantee by other partners, loss on such guarantee will be borne by dash. Partnership firm, all the other partners, partner who give the guarantee, or partners with highest profit sharing ratio. When a partner is given guarantee by other partners, loss on such guarantee will be borne by dash. Partnership firm, all the other partners, partner who give the guarantee, or partner with highest profit sharing ratio. If any partner has given guarantee to other partners, then if there is a loss, okay, then who will be bearing that loss? All the partners, or the partnership firm, or the person who is giving the guarantee. This is not a case that they are giving a guarantee to outsider. They are giving a guarantee to other partners. So in that case, who will be bearing the loss? Some are saying B, some are saying C. The answer will be C. Okay, so I'll tell you the concept. Suppose we four are partners, clear, and amongst us, the fourth partner is saying, no, I will not be admitting as a partner in your company, because there is nothing like there will be losses or profits. So he does not want to bear the risk. Okay, I am assuring him that please be a partner in the firm. If there will be a loss, I will be compensating you from my own end. Okay, so that means I have given guarantee to him. Na? I have personally given guarantee to him. So in that case, partner who has given the guarantee, that will be bearing the loss. Okay, so the correct answer will be C, because this is a guarantee given internally. Okay, this is not a guarantee given to outsider. So guys, do you have any doubt in partnership? If everything was understood clearly, okay, give a thumbs up on the video. Okay, let me know in the chat box. We shall be starting with joint venture after a break of 5 minutes. Okay, by the time, if you're having any doubt in partnership, ask me in the chat box. If you're not able to understand any MCQ question, anything I've taught in the concept part, okay, ask me. One of the most important topics, joint venture, we shall be starting. On rather, this is a type of marathon session only. When for phase 1 we have conducted the marathon session, and in that session we have covered all the important questions. So this extra session was conducted specifically for you guys. Shobit, PDF will be uploaded, and the previous 2 PDFs have already been uploaded, and this PDF will also be uploaded today. No doubt. So I'll see you after 5 minutes, guys. Okay. Shumapal, I'm telling you, there are only 4 to 5 items in profit and loss appropriation account. Okay. One is the interest on capital, salary to the partners, commission to the partners, interest on drawings. Okay. The share of profit of partner, the share of loss of partner, and the rest amount is transferred to capital reserve. Okay. So only these items are a part of your P&L appropriation account. Rest everything is a part of your P&L account. Clear? So I'll see you after 5 minutes. Just take a break of 5 minutes, guys. So guys, we are back. Any audio issues? Let me know in the chat box. By the time I'm seeing your queries, Lalit is saying, sir, can we expect 8-9 questions on each subjects? Yeah, you can expect that. Molit is saying, sir, how for phase 2, how many months financial awareness we should follow up? 6 to 7 months, definitely. Gaurav, your English में क्या करूँ कुछ समझ नहीं आ रहा. Gaurav, you can check out Narveer sir's lecture, okay, specifically for descriptive English. Okay, the lecture will be scheduled. The lecture is scheduled at 9 p.m. today. Shubham Singh, do account for at least 5-8 questions out of the syllabus. Shubham, I'm not getting a query. Manjunath is saying, but encountering computational practical questions can be challenging. I don't think they will be asking you computational questions. Okay, if they are going to ask you computational questions, they will be direct questions. Okay, it can be asked from your costing part. It can be asked related to GDP. Okay, bit of economics and rare. Okay, only 1 to 2 economics question, and costing 1 to 2 specifically from ratios and your standard costing. From your accounts part, categorization question can be asked from your balance sheet, that this is a part of which head of balance sheet. Secondly, from your small chapters, accounting standards, they can ask you. Then ratios are very important. Formulas of ratios should be at your tips, and 1 or 2 small accounting questions can be asked in practical. Apart from that, don't expect a lot of practical questions. Okay, in phase 1 also, practical questions were not asked. Okay, so I'm starting with joint venture. Joint venture, guys, before starting with joint venture, okay, I'm giving you a clear cut advice. Okay, I'm being very honest with you. See, those who know journal entries, okay, for them joint venture will be a bit easier. Joint venture is altogether a new topic. Okay, the topic is easy to understand, but the journal entries will be quite new. I am not teaching you journal entries in today's video. Being very honest, being very blunt on the video, I'm not teaching you journal entries. But very important thing I shall be teaching you today. Okay, that important thing is the MCQ questions. The MCQ question, the 8 to 9 MCQ question that I'm going to teach you, I have seen in many books. Okay, be it PSU examination, be it government examination, anywhere where joint venture is asked, these 7-8 questions are being repeated. Okay, so these are the most repetitive questions. If in examination you can find these type of questions, see, joint venture is out of your syllabus. Okay, so the probability of this being asked in your examination is less than 1%. And then at the question I'm going to teach you, the 7-8 questions that I'm going to teach you, most of the time, 95% of the time, only these are being asked. So for engineering students, it's better to just memorize them, to just ratify them. Clear? I'm also going to explain the logic behind the entries, but these are new topics for you. Don't take a lot of stress, okay, because the probability is very less. You have to play on the probability, and the probability is very less. Clear? Joint venture. What is the concept of joint venture? Suppose this is an Indian bank, Punjab National Bank, okay, and this is a foreign company, MetLife. Now, Punjab National Bank had a customer base in India. It is operating for many years in India, and it has a goodwill, it has a credibility in India. And MetLife, it is dealing into the insurance business in the foreign countries. They wanted to expand their insurance business to India, but you know they are not having a goodwill in India. So if they will directly come to India, nobody will rely on them. Okay, people will go for LIC only. So what they did, they formed a joint venture company. The company is known as PNB MetLife. Okay, PNB MetLife. Now, can they form a partnership also? The answer is no, because joint venture company, by forming a joint venture company, they have not dissolved their existing companies. PNB is still going on, MetLife is still going on. What they have done is they have opened a third company, okay, and that is for a specific purpose. That is for dealing in insurance businesses in India. Okay, and for that particular business, both are using their assets. The assets of MetLife is that they are dealing in insurance business, they are having a capital, they are having money, and Punjab National Bank, they are having a customer base in India. So both have contributed their assets, and due to their assets, now they can expand their business in India. So the first feature of joint venture is the joint venture does not dissolve the existing business of the co-venturers. Okay, the existing business of the co-venturer does not dissolve. Okay. Next is the joint venture company is formed for a particular purpose. Clear? So that is the concept of joint venture. The joint venture is for a specific project of the company, that is insurance business in India. Now, can you comment in the chat box some name of the famous joint ventures in India? Some very famous joint venture in India I would like to know in the chat box. Hurry up, let me know some famous joint venture companies in India. Give me at least 5 examples. Okay. Then a joint venture is an arrangement in which 2 or more of the parties agree to pool their resources for the purpose of a specific task or transaction. For a specific task, they are contributing their resources. So there can be 2 parties, there can be more than 2 parties. This task may be a fresh project or any other business activity. So for what activity for what particular thing they do a joint venture, for executing a new fresh project or for doing any new segment of activity. Okay. Then third is, in a joint venture, each of the members is responsible for profits, losses and costs associated with it. Okay, all the co-venturers, all the members, they are responsible for the profits of the joint venture, for the losses and for all the costs associated with it. The venture is an entity separate from its participant. Very important. Joint venture, PNB MetLife is a separate legal entity, PNB is a separate legal entity and MetLife is a separate legal entity. You have to think them of a different companies. You do not have to mix them. Okay, PNB MetLife is a different entity, PNB is different and MetLife is different. There are 3 entities here. And some example of joint venture: Sony Ericsson, Hero Honda, Maruti Suzuki. The Suzuki was an automobile brand in Japan and Maruti was an Indian brand. So they both merged to expand the automobile business in India. I can get some answer. Very good. Mooney has given SBI General. Very good. Crompton Greaves, Hero Honda, Maruti Suzuki, Bharti Exia. Very good. Okay. There is one more, HDFC Life. Some of the features of joint venture. In more cases, joint venture is formed for a particular period of time. Okay, because joint venture is formed for a particular project. Okay, so that project life is certain. So joint venture is not formed forever. It is formed for a specific period of time. Clear? Duration, it is formed for a short period of time and thus may be termed as a temporary partnership. It may be termed as a temporary partnership. Biplab Singh sir, please discuss amalgamation, joint venture and FDIs in companies, like 49% FDI being allowed. Biplab, that is an altogether different topic. Amalgamation, joint FDIs, that are altogether different. You do not have to mix them here. Parties, the person who come together to run a joint venture are the co-venturers. Okay, the members of the joint venture is the co-venturer. Next, the funds. The co-venturer bring the funds for the joint venture account. So all the joint venturers, all the co-venturers, they contribute their funds for the joint venture. Sharing of profit or losses. The co-venturer share profit or losses as per the agreement between them. In the absence of agreement, they will share the profits equally. Computation of profits or losses. Usually the co-venturer compute the profit or loss of the venture on its completion. Okay. The most important thing, the example that you have given and that I have given also, for example, Sony Ericsson, Crompton Greaves, Hero Honda, Maruti, and the insurance examples you have given. So for them, the duration clause will not be applicable because they have formed the companies for not a particular period of time but for a particular project. Okay, so in that case, the duration clause will not be possible, but they have operated for a specific particular purpose and particular project. Okay, that is why they can be termed as a temporary partnership. Okay, so this particular point of duration, that is for your theoretical purpose, you have to remember it, but practically duration clause is not applicable in some of the cases. ICICI Lombard, very good. Tata Sky, HDFC Ergo, very good. Good examples. Joint venture, the advantages of joint venture. Risk and rewards can be shared. Risk and rewards can be shared. Then synergies can be achieved. Synergies means 1 plus 1 is equal to 3. Okay, so when you are doing mass production, okay, and when 2 people join hands, so they can contribute more than the individual capacity, that is known as synergy. Then economies of scale, when you are doing a mass production, okay, the cost will be reduced, so that is known as economies of scale. Next is access to new markets and distribution networks. For example, the MetLife, they have entered the Indian market And now they are open to new markets and new distribution networks that was already available with the PNB. Access to technology and innovation. Japanese company Suzuki was very rich in innovation, very rich in technology. So Indian company Maruti, they did a joint venture with Suzuki, and new ways of technology and innovation was brought into India. Next is brand name. You can take the benefit of brand name. In India, some of the brands are having very goodwill. Okay, like Tata. Then we have your Hero. Then we have your Bharti. Okay, so if a foreign company get merged with Tata, okay, so that will automatically be a credible company in India. That will automatically be a credible company in India, because we do not have any reliability on the foreign company, but we have a reliability on the Indian company. Clear? Difference between joint venture and partnership. First of all, a difference in their meaning. Joint venture is a business formed by two or more than two persons for a limited period of time, and that too for a specific purpose. But a business arrangement where two or more persons agree to carry on business to share the mutual share in profit and losses is known as partnership. Okay, joint venture for a particular period of time and for a specific purpose, but partnership is not for a particular period and for a specific purpose. Status of minor. A minor cannot be a joint venture, or he cannot be a co-venturer of a joint venture, but a minor can be a partner to the benefits of the firms. Okay, a minor can be a partner in profits, but a minor cannot be a co-venturer. A settlement of profits. In partnership, normally we calculate the profits annually, but in joint venture we calculate the profits either on the termination of the contract or on an interim basis also. Okay, so for example, the joint venture is for 5 to 6 months, then we shall be calculating the profits after 5 or 6 months. But if the joint venture is for years, okay, 10-20 years, then we can do interim calculation also, yearly calculation also. Maintenance of separate set of books. So it is mandatory to have a separate set of books for partnership, but it is not necessary to have a separate set of books for joint venture. I will be telling you in the coming slides that how to make the books of joint venture. Okay, so not in all cases you have to maintain separate books for joint venture. Any doubt till here? Any doubt to anyone till here? Okay, then accounting of joint venture. So there are three methods to record the accounting entries of the books of joint venture. One is one of the venturer keeps accounts. There are 5 to 6 joint co-venturers. Okay, and one of them maintain the account for all the joint ventures. Then is separate books of account are maintained for joint venture, and third is separate books of account are not maintained for joint venture. Okay, one is one of the venturer keeps the account of joint venture. Second is separate books of accounts are maintained for the joint venture, and third is separate books of account are not maintained for the joint venture. Within the second one, okay, when we are maintaining separate books of account for joint venture, then three accounts are opened: joint bank account, joint venture account, and co-venturers account. Joint bank account, joint venture account, and co-venturer account. When separate set of books of account are maintained, the first account is joint bank account. Okay, so 2-3 questions can be asked from the next 3 slides. If question will be asked from this particular topic of joint venture, most probably the question will be asked from the coming 3 slides. Joint bank account. The co-venture open a separate bank account for the venture transaction. Okay, they are not doing the transaction from the regular account. They open a separate bank account for the joint venture transaction. They make initial contributions to this account. Okay, they make initial contribution to the joint bank account. Expenses are met from this joint bank account. Sales or collection from transaction are deposited into this account. However, if any co-venture make direct payment and direct collections, in such cases their personal account will be credited or debited for the transactions done. On completion of the venture, the joint bank account is closed by paying the balance up to the co-venture. What happens is, when a joint bank account is open, okay, if you're having any register at this point of time, just note down some entries, very important entries I'm going to tell you. When joint bank account is opened, the very first entry that is made is, since joint bank account is an asset, okay, so joint bank account will be debited here. Joint bank account will be debited here to co-venturer capital account. To co-venturer capital account, since they are contributing the money to the joint bank account initially. Since they are contributing the money to the joint bank account. Okay. Now, when joint any expenses is made from the joint bank account, so joint bank account will be credited, and any payment is received to the joint bank account, so joint bank account will be debited. Clear? Just note down these 2-3 things. Initial contribution, the entry will be joint bank account to co-ventures capital account. Any payment made, that means it is reducing the balance of joint bank account, so joint bank account will be credited. If any collection is made or money is deposited to joint bank account, then it will be debited, because the money is being deposited and the value of joint bank account will increase. Okay. And at the end, okay, what will happen at the end? The money that is lying in the joint bank account, it will be closed, and co-venture capital will be debited here, and joint bank account will be credited here. Since we are now closing the joint bank account, so it will be credited, and the account that will be debited will be the co-venture capital account. Any doubt in the entries I have told you? Questions will be asked from the journal entries only. In examination, questions are asked generally from the journal entries only. Clear? Please note down the entries. Next is the joint venture account. This is also one of the most important account. So when you are maintaining separate set of books of account, okay, we are opening joint venture account. Okay, every expense and every purchases will be debited to joint venture account. Every expense and every purchases will be debited to joint venture account. Every sale and every income, okay, every sale and every income will be credited to joint venture account. This account is prepared for the measurement of venture profit. This account is debited with all venture expenses and credited with all sales or collections. The excess balance of credit side over the debit side shows the profit on joint venture and vice versa. Okay, if there is excess of credit side, that means you are having a profit. If there is a debit, the debit side exceeds the credit side, that means you are having a loss. Profit and loss are transferred to co-venture account in the profit sharing ratio, and ultimately the profit and loss will be transferred to the joint venture account. Sorry, to the co-venture account. Okay, any excess or the amount that is shortage, okay, that will be transferred to the co-venture account, since ultimately the balance at the end is to be transferred to the co-venture account in their profit sharing ratio. Okay, one very important thing: why are we preparing the joint venture account? To ascertain the profit and losses. Okay, and we are creating it with the expenses and purchases, and also we are passing the entries for sales or income here. Okay, so as per the nominal account rules, we have to debit all expenses and losses and credit all income and gain. So joint venture account is a nominal account. Joint venture account is a nominal account. Joint venture account is a nominal account because it is used for calculation of profit and losses, and the entries of expenses, losses, income and gains are calculated here. Last is the co-venture account. Co-venture account, personal account of co-ventures are maintained to keep a record of their contribution of cash and goods. Okay, so this is the books of joint venture, and co-venture are different from here. Okay, co-venture are different parties. They are separate legal entity. So joint venture is maintaining their accounts so that their the transaction between the joint venture and the co-venture can be recorded here. Expenditure directly paid and payment directly received by co-venturer are recorded in the co-venturer account. So any payment to an outside party directly paid by the co-venturer is recorded in co-venture account, and any amount directly received by the co-venturer is also recorded in co-venturer account. The profit or loss so made on the venture is transferred to this account in the agreed profit sharing ratio. This account is also closed on completion of the venture. Ultimately, this account will be closed on the completion of the venture. Okay. Clear? Now you should know two things. One is the type of account. Just like I've told you, joint venture account is a nominal account. Okay. So which type of account are joint bank account and co-venture account? One important question is this. Second is some basic journal entries I will be asking you in the MCQ part, and you have to tell me the entries, which account will be debited here, which account will be credited here. That's all. Okay. Joint venture, only these things are important. Most of the time only these things are asked. Clear? Now moving on to the very first question. Joint venture is a dash. Personal account, nominal account, real account or memorandum account. In joint venture, most of the questions are of repetitive nature. Joint venture is a dash. Personal account, nominal account, real account, memorandum account. अच्छा एक बात बताओ, किस किसने पाप किया और वीडियो को लाइक नहीं किया अभी तक? वीडियो को लाइक ना करने का पाप किस किसने किया अभी तक? और किस किसने वीडियो को लाइक कर दिया जल्दी से वो बता दो. Nominal account B, absolutely correct. सबने दिया सही जवाब. Everyone is given the correct answer. Next, partners to joint venture are called dash. Co-venturers, partners, agents, trustees. Partners to joint venture are called dash. Co-venturer, partners, agents, trustees. Absolutely correct. A. Array, Manjunath, you have given the wrong answer. It is A, not B. Partners to joint venture are called co-venturer. Next question. What is the nature of co-venture account? Very important. Co-venture account is a dash. Nominal account, real account, personal account, or none of the above. This you can solve by the technique of elimination. Some are going with C, some are going with B. Okay, I guess everyone has gone with C. The correct answer is C. Co-venture account is a personal account. Okay, because any transaction with a co-venture, that will be recorded as per the debit the receiver, credit the giver, personal account rule. So the answer is C, personal account. When purchases are made for joint venture out of joint bank account, the dashed account is debited. Joint venture account, purchases account, expenses account, or none of the above. I have told you in the video, when purchases are made by the joint venture out of joint bank account, the account dash account is debited. Joint venture, purchases, expense, or none of the above. So it cannot be none of the above. Either it is A, either it is B, either it is C. Some are saying purchases account, some are saying joint venture account. I have told you that in joint venture account, all the purchases and all the expenses are recorded. Okay, just note down the entry. Any purchases made by joint venture or any expense paid by joint venture, the entry will be joint venture account debited. Joint venture account debited to bank, to joint bank account. Okay, joint venture account debited to joint bank account, and any amount received, okay, any sale income received by the joint venture, the entry will be joint bank account debit to joint venture. Okay, so the correct answer will be A, joint venture. Next, when unsold stock is taken away by a co-venturer, the dash account is debited. This is important. When unsold stock is taken away by a co-venturer, the dash account is debited. This is a tough question. Okay, this is a difficult question. Let us see who will answer this correctly. Welcome, Daljither Singh. Going with B. Some are going with B. Utkarsha is going with A. The correct answer is co-venture capital account. Okay, he is checking the stock of a firm. He is checking the stock. So ultimately the entry will be co-venture account debited to joint venture. Okay, co-venture account debit to joint venture. Why joint venture is debited here? Since we have not recorded the stock, now purchases were made to joint venture account. That is why joint venture account will be credited here. The entry for this here will be co-venture account debit, since he is taking a stock account debit to joint venture, because our stock is reducing and stock we have recorded through joint venture. Clear? Next question. Which of the following statement is false? JV. JV stands for joint venture. Joint venture is terminable in nature. Joint venture is a separate entity from its members. Joint venture is a going concern. The co-venturers share profit and losses in agreed ratio. Clear? Joint venture is not a going concern, so C is the correct answer here. Utkarsha Tiwari, wrong answer. I have told you joint venture is for a particular project, so it is not a going concern. Next is joint bank account is a dash. Nominal account, personal account, real account or dummy account. This question nobody will answer correctly, I know. Nobody knows the answer to this question. This is a very tricky question. Joint bank account is a dash. Manjunath, Moonlit, Gaurav going with C. Jyoti going with B, Anuradha going with C. Take your time, think properly. So the correct answer is B. I'm telling you the correct answer is B. Just tell me the logic behind it. The correct answer is B. Tell me the logic behind it. That's why I told you, na, nobody will give the correct answer of it. It's not a dummy account. Hurry up, can anyone tell me the reason why joint bank account is a personal account? No, it is not open in the names of co-venturer. Absolutely correct. Shubham Pal, good answer. Joint venture is a separate entity. Very good, Anuradha. So tell me, what is the rule for a personal account? The entries I have told you, are these being done as per the rules of personal account or the rules of real account? Gaurav, it cannot be nominal account because nominal account is for profit and losses. Okay, tell me that the entries we are going to make, the entries we are going to record in the joint bank account, are these being done as per the rules of personal account or real account? We are treating the joint bank account as a separate account. We are treating the joint bank account as a separate person, okay, as a separate thing. Shubham has given an answer, but I'm not receiving the exact answer. Debit the receiver, credit the giver. So the entries I've told you, are we recording it through the personal account rule or the real account rule? This is a bit of a tricky question, and it is not easy to understand the reason behind it. See, normally the bank account that is prepared in our books, that is our real account. But the joint bank account, the joint ventures bank account, is a personal account. Normally in our books, the bank account we maintain, in normal cases, when we are maintaining our own books of account, the bank account is a real account. But here when I'm talking about joint bank account, okay, it is a personal account. We are treating the joint bank as a different entity. We are treating him as a separate entity. Okay, here when I am making an entry that money has been deposited by the co-venturer to the joint bank account, I am making an entry that who is the receiver here? The bank account, the joint bank account will be debited here. And who is giving? The co-venturer is giving. Okay, so co-venture account will be credited here. I am making the entry by this rule. I am not making the entry that money has been increased or something has been decreased. I am making the entry that joint bank account is different, co-venture account is different, and I am a different person. I am a different person, joint bank account is different, and co-venture is different. Clear? Absolutely, Shubham. When co-venture contribute funds, they send money and joint bank account receives it. Debit the receiver, credit the giver. By this rule, we are maintaining the entries here. This is a very important point. Okay. Normally, if you have never solved this question, you do not know the answer. Okay. That is why I have given you this question. In the examination also, I guess most of the students have got the reason behind it. If still anyone has a doubt, okay, if still anyone has a doubt, just remember this point that joint bank account is a personal account. Next, which of the following account is opened when separate joint venture account is opened? Okay, which of the following accounts are opened when separate joint venture account is opened? Joint venture, joint bank, co-venture, or all of the above? When separate books of accounts are maintained, then which of the following accounts are opened? Joint venture, joint bank, co-venture, or all of the above? This question drafting language, there's a wrong drafting here. Whenever the separate books of accounts are maintained, then which of the following accounts are opened? Joint venture, joint bank, co-venture, or all of the above? All of the above, absolutely correct. D is the correct answer here. The following accounts are made: joint bank account, joint venture, and co-venture account. Next, what does the balance in memorandum joint venture account shows? Another important thing. Now, okay, I'll tell you afterwards. Okay. Options are profit and loss, closing stock, balance due from other co-venturer, or difference in trial balance. What does the balance in memorandum joint venture account shows? Profit or loss, closing stock, balance due from other co-venturer, or difference in trial balance? Skip, okay. Gaurav is saying C. Shubham Manjunath isn't going with A. It is A. Okay. Memorandum joint venture account is a temporary account. Normally we prepare it to ascertain the profit and losses. Okay. Whenever we are closing the books or interim basis, also we prepare a memorandum joint venture account. It is just prepared to ascertain the profit and losses at that point of time. Okay. So it is a temporary account. And one more important thing, it does not follow the double entry accounting system. It does not follow the double entry accounting system. Okay. The balance amount of memorandum joint account either show the profit or loss. The co-venture will share the profit or loss in the agreed ratio. Remember that balance of joint venture with co-venture account shows the amount due to the other co-venture or due from the other co-venture. So joint venture with co-venture, this is a separate account that will show the balance what one owes to the other co-venture. Okay, this additional information I've given you. Okay, this is not about memorandum joint venture. This is additional information that what does the balance of joint venture with co-venture account shows? The amount due to the other co-venturer or due from the other co-venturer. Provision of Indian Partnership Act are also applicable to joint venture. True or false? Provision of Indian Partnership Act are also applicable to joint venture. This is just for your knowledge. The answer is true. Okay, some of the provision of Indian Partnership Act are applicable to joint venture. Some of the provisions. Next is, which of these is not a part of double entry system? Joint bank account, joint memorandum account, joint venture account, or joint venture with other co-venturer account? Which of the following is not a part of double entry system? बहुत ही बुरा हाल है बच्चों, बहुत बुरा हाल है. डबल एंट्री सिस्टम क्या होता है? डबल एंट्री सिस्टम क्या होता है? बहुत ही बुरा हाल है, बहुत ही बुरा हाल है. Joint bank account is a which type of account? अच्छा एक सेकेंड, tell me one thing. Joint bank account is a which type of account? Joint venture account is a which type of account? And joint venture with other co-venturer is a which type of account? Everyone has given the wrong answer. The correct answer is B. Shubham Pal has given the correct answer. Okay. Okay. Just listen. Joint bank account. It is a personal account. It is maintained as per the debit credit rule. Joint venture. It is a nominal account. It is prepared by debit credit rule. Joint venture with other co-venture account. It is prepared by debit credit rule. Memorandum account is a temporary account. It is not prepared by debit credit rule. Double entry means which is debited and credit rule जहाँ पे ऑपरेट होता है, ठीक है, which is made by debit and credit rule. But memorandum account is a temporary account, not as per the double entry system. So the correct answer will be B. For every debit there should be a credit. That is a double entry system. Clear? The correct answer is B. Next, loss on joint venture is dash credited to profit and loss account, debited to co-venture capital account, credited to joint venture account, or credited to joint bank account. Absolutely correct, B. I've told you the entry. It is B. Next, which of these accounts are not open in the joint venture? Joint bank account, joint venture account, co-venture personal account, or stock reserve? Which of the account is not open in the joint venture? Everyone has given the correct answer B. Gaurav Rastogi, you have given wrong answer. I have told you the entry. The entry would be joint venture account debit to co-venture capital account for the previous question. Okay. Joint venture to co-venture capital account. B, stock reserve. Okay. So guys, these were the most important questions. The question I gave you today are repetitively asked in all the examination. I have not given you goodwill questions. Goodwill questions are also important, but I have told you the concept. Okay. And apart from these topics, I don't think there are any things which I have left in partnership and joint venture. If you have any doubt, ask me now. And for those students, some students were saying that it is not possible for us to cover a lot of topics in these last 3-4 days. So my recommendation for them would be that these are extra sessions. If you do not want to go through them, just leave the videos. Okay, there is nothing necessary to go through them. These are just for the students who do not want to lose even on the last marks. Okay, there is the slightest possibility of them being asked in the examination. That is why we are making these sessions for you. We are not making the sessions for us, we are making it for you. Clear? So kindly share your feedback with us. Okay, our email ID is given in the chat, in the description box. hello@edutap.co.in. Okay guys, if you're having any doubt, let me know. If you're having no doubt, just like the video and tell us in the comment box. Okay, so my best wishes with you. I'll see you in the next video tomorrow. The next video will be on SEBI Act and SECRA. So just have a reading of these two acts. I shall be explaining it to you tomorrow. Okay.